The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Helping us get the inside scoop on this insider trading allegations is none other than CoinDesk Global Policy and Regulation Managing Editor, Nick Day, who, by the way, is also the editor of CoinDesk's must-read newsletter, The State of Crypto. Morning, Nick.
Good morning. Happy Friday.
Happy Friday to you, but it's not a happy Friday for everybody because somebody's been charged with insider trading. But what's interesting to note is that along the way, the SEC used the word security or securities to describe 9 cryptocurrencies that this Coinbase employee was alleged to have done some, shall we say, insidery, tradery kind of stuff. Is that correct?
Yeah, so this is such a really interesting case. I mean, look, insider trading, if the allegations are true, they're bad. Insider trading is bad, don't do it, whatever. The SEC straight up called 9 different cryptocurrencies. Allegedly, insider trading is bad. Anyways, the SEC straight up called 9 cryptocurrencies securities. They said they said allegedly they're securities, but they were very explicit about calling these assets, which include things like Flex's AMP token, Rally Network's RLY token. I don't know what the token's actually called. The Rari governance token, several others securities in this complaint. And part of it's because the SEC doesn't have jurisdiction if there's not like a credible securities angle to this, but it sure seems like the SEC came out and said, hey, this publicly traded company that we oversee has listed several securities that are, they should be registered with the SEC, and that the trading platform in question should register as a securities trading platform. And then so far, at least, has not done anything with that information. It's just said, okay, we're going to call these securities, but we're going after this other guy for insider trading allegations. It raises so many questions. I mean, are they going to go after the issuers? Are they going to go after other exchanges that list these tokens? Are they going to, try and force some kind of compliance with Coinbase, for example? Yeah. Coinbase, for its part, has said that it does not believe these are securities, and so we may be bearing towards some sort of a showdown.
I think they said even that this was kind of a distraction from what the real case is, but nonetheless, we've heard that the SEC is kind of like more about they're kind of doing all of this regulation there, or not heard, but what it most likely is that they're doing it through these sort of enforcement actions rather than so taking a reactive standpoint, but. By calling it securities, I mean, does that actually mean there were securities? Was it a slip of the tongue? It seems like they were serious about calling these securities, and yet they never gave a problem to Coinbase before for allowing trading in this without proper licenses, et cetera.
Right. That is just one of the many questions that circles this. I mean, reading between the lines of the statements that Coinbase put out yesterday, and looking at the other companies that are affected here. So, for example, we mentioned that Flexa is one of the companies, Rally Network, et cetera. It doesn't seem like the SEC has reached out to either Coinbase or any of these other companies to give them a heads up. Hey, we're investigating this, or we believe that these are securities. In the past, a lot of the times when the SEC brought a securities enforcement action, you heard that the companies that, the issuers, for example, might have received Wells notices or might have received a warning that the SEC was looking into this. A lot of these were settlements. So the SEC and the issuer, agreed to whatever mutually acceptable terms before, this was revealed. And generally, the SEC has brought these enforcement actions against the issuers themselves, saying like, hey, yeah, we think this token that you issued is a security. That didn't happen here. So the question now is, is this some kind of a binding guidance? Do the issuers have the opportunity to defend themselves against the SEC in court or some other venue, saying, "Hey, we disagree with your assessment that this is a security"? Does Coinbase have to do it as some kind of intervening party in this insider trading case? Which, by the way, Coinbase itself is not being accused of wrongdoing here. It's just that the guy who is arrested happened to work at Coinbase, but Coinbase, itself was investigating this after tweets and stuff in April. And the DOJ, went out of its way to say that Coinbase itself is not being accused of wrongdoing. So technically, Coinbase isn't even a defendant here. So if they were to get involved, they'd probably have to file to intervene. So it's just
Interesting.
There really are so many questions.